Hi, everyone. Welcome to the 96th episode of the weekly Timing Research Show. Today we are going to be talking about the 148th weekly report. And if you have not had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any past report there. My name is David Kosmeter. I'm the creator of Timing Research, and today I have Matt Buckley back to moderate. So I'm going to go ahead and turn it over to him.
Thanks, David. Welcome aboard, everybody. My name is Matthew Buckley. My call sign is Whiz, and you can refer to me to Whiz as going forward since you're friends now. Very fired up to be leading today's roundtable. As usual, David has a good group of 500-pound heads assembled to talk about what's going to be going on in the market this week, where we think it's going to end up. Maybe even get a special trade out of all of our guests today. A good trade that we're looking at in this market, especially as we're at hypoxic highs here and extremely high multiples, and we're starting to see a little bit of the market maybe thinking about where we're going next today. We have Mary Ellen McGonagle. She's from Pro Trader Strategies. We have Fausto Pugliese from Cyber Trading University. Good to work with you again, my friend. And Ed Carlson from Seattle Tech Advisors. Again, good to see you again, Ed and Mary Ellen. I look forward to working with you. We'll just keep that order all day today, Mary Ellen, Fausto, and Ed, as we go through some of the questions. But standard rules of engagement apply. If you hear something that's just completely not even close to what you think reality is, or you agree, we can go ahead and jump in and have a little free flow discussion after that, because I think the folks get a lot out of it. But before we get airborne, let's go ahead and give everybody a quick brief, nice executive summary, who you are, where you came from, and what you currently do in your current squadron, so to speak. So, Mary Ellen, let's kick it off with you.
Sure, great. Yep. Mary Ellen McGonagle, and I started my illustrious career at Goldman Sachs on their trading floor. Very low man on the totem pole, but very exciting. And from there, I went to the buy side. I was a portfolio manager, fixed income. I managed about $2 billion in assets, and launched from there to the West Coast, and I joined William O'Neill and Company in Los Angeles, and I was on the institutional sales team, and I traveled the globe working with top PMs and analysts and advising them on the markets. And currently I have my own research firm. It's MEM Investment Research. I put out a weekly advisory newsletter. It has stock picks as well as an overview of the markets and where I think the markets are headed. And that's been for the last few years. And yeah, that's it.
Is it where are you still out in California, Mary Ellen, or where are you?
Yeah, still out here in Los Angeles. Yeah.
Oh, beautiful. Mm-hmm. God's country.
Quite lovely, yes.
Yeah, I lived out in Orange County there for a while in Irvine. I used to fly out of it used to be Marine Corps Air Station El Toro, and now I think it's a business park, right?
Absolutely, yeah. In fact, I used to work very close to that.
Oh, okay. Yeah, I was one of the guys making all that noise.
So you
awesome.
Okay.
I'll give you my background here in a couple seconds. But Fausto, how about you? Give everybody a heads up about your background, my friend, and what you currently do at CTU.
Yeah, thank you very much. And I'm one of the original day traders that started back in the early 90s. When I started, it's about 1,000 of us. Now they're one of the original Souls Bandits. So I live here in New York. I was trained by some of the best traders on Wall Street. And how I got into this industry and get into the education business is that, I started young at 22 years old, believe it or not, semi-retired at the age of 24, but I love teaching people, so many people losing money trading the market. So I have a different perspective on what most of the people that are here doing the speaking, in a way of like I'm more or less trading on a day-to-day operation. I run a professional trading room with hundreds of day traders and swing traders that are in there. We do some options trading also to leverage that we're trading every day, but I got into the industry more or less of educating the world through webinar technology all over the world and hosting thousands and thousands and thousands of presenting in front of thousands of people a week, educating the world of how to trade and monetize what's going on with today's volatile markets. What's happening that obviously everybody knows has been a big change. With today's technology, a lot of people could do it on their own, and that's why a lot more people are starting to educators of what they're doing and how they can start doing on their own. So it's been quite exciting, and like I said, I've been I'm here every day, and I love it every day, and that's why I'm here. So I'm here to hear my insight and tell you a little bit about how to look at it as a perspective as a day trader, because what happens over the course of the day, which everyone has to understand, obviously spills over into an investment in a swing trade, and obviously you can see the Dow breaking record highs. We'll have some fun talking about that.
Mm-hmm. Awesome. And Fausto, you're in New York, right?
Yes, right
okay,
here, not too far. It's just right on Long Island. I'm only about 20, 30 minutes outside the city.
Okay, roger that. Awesome. And Ed, how about yourself?
Thanks, Matt. I publish it's standard technical analysis at website SeattleTechnicalAdvisors.com, but the niche here is the work of George Lindsay. And for those that don't know, Lindsay was a guru back in the 50s, 60s, and 70s who he wrote an investment newsletter for over 30 years, but he never wrote a book. He never put it all into one usable, never explained it except in bits and pieces. And so I cut and pasted a lot of reports together to figure out what he was up to that enabled him to make such incredible calls. And I've written actually 3 books now trying to explain his work, and that's the niche of the website, is the work of George Lindsay. A lot of people who have never heard of Lindsay have heard of a pattern he named called 3 Peaks in a Domed House. But that's the story here.
Okay, awesome. And for those of you who don't know me, my name is Matthew Buckley. My call sign is Whiz. Earned that flying the FA-18 Hornet for the United States Navy for about 15 years. Early on in high school, I was always interested in finance. Seeing, my dad read the newspaper with the all these, look like hieroglyphics to me, all these symbols and stuff, and he explained that to me, and I just kind of got hooked. But decided to hang it right and go fly and serve my country. But I taught myself how to trade equity options in the early 90s, 90, 91, and which was essentially before Al Gore invented the internet. So really, 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 really self-taught. So if you wanna know any mistake in the options world, you're looking at it. But I refined that over time, because as I began to flying fighter aircraft, I realized that trading is a form of combat. When you think about it, somebody's going to win and somebody's going to lose, and why wouldn't I be doing the same thing, in front of a screen that I was doing a jet, having a strategy, implementing tactics, contingency planning, knowing when to get out of a bad situation before it get worse, being disciplined, not being emotional in my decisions, and making it based purely on data. And it really, my trading took off through the roof, and I ended up popping up on the radar of one of the largest volatility arbitrage firms in the United States, actually the world now, Peak 6 Investments, headquartered right there in the CBOT and the CBO. And then after I was their managing director of strategy for a year and a half, for the next year and a half, I started the Options News Network. So a lot of you are probably familiar with it, ONN.TV, and I was a host on a couple of those programs, and it was great. Had an absolute blast up there, but Chicago winners are just stupid. They're better left for people than me, and I don't know if you can tell, but this is my home in Boca Raton, Florida. I live right next to the Seinfeld, Jerry Seinfeld's parents in Boca de la Vista here. But so I started Top Gun Options about 6 years ago, and we teach retail traders, and I have pros. I even have financial advisors with us. We have live trading rooms and a bunch of other stuff we can talk about later, but that's my background. So let's go ahead and get airborne. Welcome aboard, everybody. Like I said, you're in our Timing Research Weekly Roundtable. And question 1, Mary, let's kick it off with you. What direction do you think the S&P 500 index is going to move from today's open to Friday's close?
Well, I have been trained and am very well versed in momentum trading. That's my background. That's how I work. And with that type of backdrop, when the markets are hitting new highs, it's hard to not get excited. And of course, we've seen quite a move here recently since the Brexit rally. The S&P before today was up 9% from its lows. So we've seen quite a move here recently, but that said, I am erring on the side of upside for the week. I'm not saying it's going to be a blasting big week, but given the backdrop, we have a lot of growth sectors, technology and so forth hitting new highs, coming into their own. Now, of course, we do have the Fed meeting and the announcement on Wednesday, which could very well present a speed bump. I say that primarily because over the weekend there was a very low percentage built into there being an increase or the possibility or the talk of an increase in rates. So I think if we get any kind of talk in that direction, we could see the markets respond. And then, of course, this week we have 1,100 companies that are going to be reporting their earnings, and several of them are very high profile. So that could also, of course, give it some volatility to the markets. But at the end of the day, I think the markets will end the week up, albeit perhaps just a small percent. And I think the next question is what percent, and I'm 85% sure that that will be the case. Is that
okay? So we got up with an 85.85 delta. Wow. All right, Fausto, over to you, man. Let's see what's your opinion.
Well, obviously, being a day trader, it's always hard to always predict what's going to happen to the future. But what's been happening, I think the last time I was on here, we were talking about pre-Brexit, and I think from what I remember last time we talked about, I said, listen, I was thinking it was going to, if we didn't break that major resistance levels on the S&P and on the Dow, which was right around the 18,000, and which was testing it busted right through that, and that's where we're at right now. So as a day trader, and I've been through the 95 crash, the 2000, the 2008. When you break all-time highs, I remember this going back in 2000, in 2000 actually. It's just there's nothing to really stop unless some really big catastrophe goes on. So I'm still looking at it as being a very bullish, a bullish market. Listen, one of the great things of what we do as a day trader is that for seeing 1,100 companies coming out earnings this week, this is like, this is our DNC, I would say, when it comes to earnings. So we have a field day, and there's going to be a lot of great volatility going on. But, the market's been extremely strong. So when you break, one thing you got to be very careful. A lot of people I know are starting to second guess this market and said, we're going to have a correction. We're going to an election year. But when you break all-time highs, everyone's kind of forgetting this. There is no – what makes support and resistance levels is buying and selling. And when you break through major resistance levels and there is no – and you're in what's called uncharted territories, means that nobody owns a stock or anything at these price levels. There's nothing to resist it from going higher. So, if we're getting a lot of good reports on earnings, and obviously after seeing what's happening where Verizon's coming out and starting to blow some money and buying, Yahoo, I mean, that means they're sitting on a lot of cash on the side. So I could see it, as of right now, it could be a very a bullish market.
It's a great point, man. You made a lot of great points. There hasn't been nothing can keep this market down. You used the word catastrophe. I couldn't agree more. I was telling my traders going into the Brexit, I said, even if they vote to leave, the governments and the EU and everybody was making it seem out like it was going to be a Y2K event, like airliners were going to roll upside down and crash, or ships are going to sink. None of that happened. So I said, in a week, we're not even going to know the word Brexit or remember any of that. And I was wrong, because I think it was 4 days later. It wasn't a week. I was actually, but my point was that this market can't, we're seeing terrorist attacks. We're seeing, when you go through the catalog of what can keep this market down, you kind of shrug your shoulders. The last thing on my list would be what you just said, Fausto, would be earnings. But the way I'm charting out earnings, it's going to be massive this week. Maybe we'll talk on Friday, but at least up until now, I think CNBC uses the same graphic from every earnings period. It's like 66% beat, 20% in line, and whatever the hell the rest is, 14 miss.
To add something to that, just look at the stock AMD right now. We've been day trading it all day today, and AMD has been on fire in the past, past 2 months, and whoever heard of AMD? That stock hasn't done anything in like forever. The stock was $3, got destroyed. Yeah, look at it. It's at $7. The thing's up over almost 18-19% today, and it's breaking all-time 52-week highs. So so there's obviously where there's smoke, there's fire, and that's where you have to look at it.
Correct, and especially with what I call the Wall Street game going on. I've been in the boardrooms. I've talked to CFOs. I've been around when people make decisions that say, "Oh my God, we're going to have an awful quarter," and well, you better run out to go out and tell everybody before earnings next month. Okay, so they inoculate us, and then when the earnings come out, instead of being completely awful, they're just really bad, and everybody looks around and goes, "Wow, those earnings are probably pretty good." So I completely agree with what you're saying, and I hope everybody really listened to what Fausto said about the market being at all-time highs. So nobody knows. So you're right. You're trading in stocks or you're in whatever at areas that they've never been before. So conventional wisdom, at conventional wisdom you have to throw out the door. So I get that. Bill Gross from PIMCO, what's his name? Gunlock from DoubleLine. The guy from BlackRock last week, Larry Fink, all these heavies, quote unquote, are like, hey man, we should not be up here. It's nuts. I did the same thing that Fausto did and looked around and said, why shouldn't we? You got to be up here eventually, so why shouldn't we be right now? So, but I'll give you a little bit more what I think. So, good stuff, Fausto. Ed, how about yourself? Higher or lower by the end of the week?
Wow, there's nothing worse than a guest without a strong opinion. Very, very unentertaining. I can't deny anything that Mary Ellen or Fausto have said, and yet I'm still nervous. It seems to me everything seems to be saying the market should be going down, and yet the price is always the final arbiter. Look at it. The VIX has entered its seasonally bullish period of the year from July to October. That's negative stocks. Sentiment is at an extreme bullish, which of course, as we all know, is contrarian bearish. Take a look at an index of commodities. They're diverging. They seem to be saying risk off. And they're usually right when they diverge with the equity market. So I'm nervous. I'm frankly, I don't know what to say. I'm 100% confused.
Well, that's a high probability right there.
That's a high probability. I'm sorry.
I love it. No, hey, Ed, that's the honesty sometimes really helps because a lot of retail traders don't get any of that. So that actually will help some people because a lot of the smart money I just quoted is saying, oh, we shouldn't be up here, and a lot of people, retail traders, will follow that and say, well, I got to listen to Larry Fink. But if you don't know, you don't know. So that's a very legitimate answer because there is a lot of confusion. I think we're going to be, and I won't get into our question 3 and cut into that because I'm going to come back around and ask for the whys. I think, based on where we open today, which was down, I think we're going to end up. And I'm going to go with I'm going to steal Mary Ellen's 85%. I'm up there, a higher delta, because as Fausto and I were hitting the ball back and forth, I just, unless, here comes, I'm an options trader, here's my hedge, unless just something stupid comes out of the Fed on Wednesday. I mean, they're obviously not going to raise rates. I mean, something stupid. All we care about Wednesday with the Fed is what they say about down the road. We really don't care about them not raising because it's 0% probability they're gonna do that. So I'm going to go up with 85%. So Mary Ellen, that takes us to kind of that third question, which is, I think you sprinkled some of your stuff in there, but maybe hit it again, or after hearing us, you want to add or subtract from what we said. What are your specific reasons you think the S&P is going to head higher with an 85% probability there?
I think we lost her.
Yeah, we might have.
It looks like we lost her.
Okay.
So hopefully she'll be back on in a minute, and I'll let you know if she comes.
Yeah, no worries. No worries. Fausto, how about you? I think you rippled off a couple of your thoughts, but anything to add, subtract, or by the ways?
Well, just like I said earlier, when it comes to listen, I've heard the Fed speak, in my lifetime hundreds of times, and they're not going to do anything that's going to get them in trouble. You know what I mean? They go into an election year. If it was up to them, they wish that they could just settle in the sunset, peacefully, and they're not going to do anything crazy. So they're just going to sit in the sidelines. I always notice after years of trading, these things leak out. If they're going to do it, they're going to leak out. They're going to say they're going to do it. I don't know. I don't think they're going to probably do anything crazy. They're not going to assist anything crazy. They don't want to get themselves in trouble. And I think the market's going to just continue to do what it's doing, just keep going that direction. So that's the way I kind of forecast where it's going to probably head over. But but like I mentioned to earlier about the S&P. I mean, it's when you have all those companies out there and you go into an earnings one of the every quarter, and you go into this big earnings week right here, you're going to see a lot of good volatility. But I don't really think I wouldn't get too crazy about it. Unless, like you said earlier, unless some big catastrophe happens, which makes us all, which could change everything.
Yeah, but even there, some of these catastrophes that we've seen, even in this, not just this real market, but in the past couple of years. I mean, hell, we woke up one morning and Russia invades a sovereign country in Europe, Ukraine and Crimea, and I was like, is that not something that can really cause shockwaves? Even the Greece clown car, what was that, 2 years ago? We traded, I was trading weekly options. I mean, I knew you trade daily, but our weekly options portfolio crushed it because, every day it was like, oh my God, they're going to throw them out of the Eurozone. I'm like, no, they're not. Let's, get bullish. Oh my God, they stay and everything's perfect. I'm like, no, it's not. Let's sell. Matt, you're right.
Matt, one thing I want to add in about the Brexit, what we talked about, because last time we were on here, I just wanted all the listeners to understand is that, you can't, the only way the government to influence the market is when they do something like they did in 2008 when they do a bailout. You saw, President Obama go out there and telling you gotta stay into the EU. And look what happened. They turned everything around, and the market, it was an opportunity to make money on it. And look, and people are like, oh, they're going to get destroyed. It's going to kill the market. Look what happened. Now we're breaking all-time highs. So you can't buy into and feed into that. Even like with the buyout with Yahoo right now, it's like you're thinking like, oh, they bought out. Did you look what Yahoo is doing today? It's doing nothing. Yeah. It's actually down. So it's like, yeah, it's down $1. I mean, it's like when people are like, well, that dog got bought out for $5 billion. This is what you learn over the course of the day that, one of my greatest mentors always taught me, and says, Fausto, I know this doesn't sound like what you want to do, but when you're a trader, you can't, the less you know, the better it is, because when you think you know something and you see like, oh, it's got to be a buy, I want to buy Yahoo, and then all of a sudden the thing is down, and then like, well, where did $5 billion go? Or you see what's happened with Brexit, the only time I ever buy into everything what the government's doing is like when they are, when they do step in and, the quarter raise, whatever, they already said that. If they come out with a half or, or they're going to bail somebody out, then, that's where you got to buy into it.
Couldn't agree more, man. I really think, Fausto, you laid out exactly some of those potential catastrophes that have really, the market kind of shakes off. The only catastrophe thing going forward, barring just something, a wrath of God, which we all hope doesn't happen, is a central bank taking away the hopium. I mean, we saw Bank of Japan Governor Kuroda, and we had Ben Bernanke was over in Japan. Was it last week? I'm like, talking about helicopter money. So barring any of that, barring something really bad this week, I couldn't agree more. Mary Ellen, did you jump back on?
Houston, I have reconnected. Yes. I'm sitting and it just shut down. I apologize. I'm back.
You are cleared for re-entry, astronauts. So
there you go.
Yes. Let me get your take on question 3. I know you sprinkled some in your answer initially, but what are you seeing on your radar scope for the week that is going to drive the market higher for your 0.85 delta confidence level? What are you looking on your radar?
Sure. Well, yeah, we certainly did talk about the Fed meeting, and that's always very closely watched. if we do have some really high voltage stocks that are reporting this week, and a couple of them have been market movers in the past when they've reported. One name would be Facebook, and that's a name that I've had on my buy list for over a year now. Great stock. But names like that, as they come out and report, similar to last week, we had Intel came out, eBay, some well-known stocks that beat estimates, and the markets loved it. They responded quite positively. I think someone earlier talked about AMD, and that brings to mind what's going on in the semiconductor space. I do a lot of work with sector analysis, and if you look at the semiconductor index, it's just powering to new highs with that technology sector. So as we see companies well-known come in and report, ideally, of course, above earnings estimates, which, by the way, have been, analysts have been under reporting their estimates, so it makes it easier for a lot of these companies to come in ahead. But nonetheless, as they come in ahead of estimates, I think that's going to continue to be a driver for the markets for the upside.
Yeah, we were. I think you had dropped offline, but we were talking. We were all laughing about the standard Wall Street game with earnings, which is if you can't hit the ball over the net, lower the net.
There you go. Okay.
Yeah. So a lot of the beats are misses, but beats from revisions to this and that. So yeah, exactly. Okay, Ed, and finally, how about on your radar for this week that's going to force the market to adhere with your confusion stance?
Yeah. Well, I think I've already laid out the case for this week. So I mean, the only thing I can add to it, we're in an election year. Typically, up until about September, things go pretty good for the markets. However, this year's a twist on the usual story in that this is the 8th year of a presidential term. And if you look back on the few presidents who have actually made it through an 8th year, let's see, I count 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6, 7. Well, I guess this is the 7th time with Obama. So 6 previous 8th year presidential terms, almost all of them were negative. Wilson, I've got the list here. In Wilson's 8th year, the market was down 32%. Roosevelt was down 12. Eisenhower was down 9. Reagan was up 12. He was the exception. Clinton was down 6, and Bush was down 33% in the 8th year of their terms. I don't know if anybody follows the decennial cycle anymore, but in the 6th year of years ending in 6, you tend to see July get off to a nice start, but then to collapse at the end of the month. Well, we're at the end of the month, so it's like now or never if this one's going to work this year. But it's just more anecdotal evidence that keeps me nervous and not feeling very comfortable. Looking for a pullback. What can I tell you?
Yeah, well, I don't know if we're going to do the old share thing here. I don't think. So let me give you my looking at the week. So I agree with everything everybody just said. Obviously with the Fed, and Fausto, to your point, I don't think we would know something by now. So you're exactly right. The Fed is not. I mean, they've been catching artillery fire for a little while now about not being a little bit more telegraph. They haven't telegraphed what the heck's going to happen, and then quote shocking the market. So I'm pretty sure, John Hilsenrath at the Wall Street Journal is, I think he works for the Fed. I mean, literally, the guy, he's obviously got a mole or sources or something, but, and he wrote an article last week saying July, obviously zero, it ain't going to happen. September is climbing pretty rapidly. The only reason I'm not a September is because, Ed, what you just said, it's an election year, and it's going to be an ugly one. I don't think that she would want have an interest rate increase be a huge political football in the middle of an election. I saw on, can't cite my source. I forget where it was, but when you donate to a candidate, it's a matter of public record, and it turned out that 85% of employees at the Fed who had donated to a candidate donated to Hillary Clinton or Bernie Sanders. 0.0% donate. Not one person at the Federal Reserve donated to Donald Trump. I thought that was pretty interesting. So I guess she's right when she sat in front of Congress 2 months ago to we're apolitical and blah, blah, blah. Oh, okay, we'll believe you. But if you look at this chart, Ed, I think you're right. So here's the, oh my God, Brexit, and then what Brexit? And then we chopped for a couple days as we decided what we're going to do, and then just we're scaling Mount Everest here. So I don't know if we're going to get a pullback. If we do, it's probably only going to be maybe half to the 50-day moving average. I just don't. It would be in my opinion, a relief maybe a relief pullback. Kind of like, hey man, we're up at altitude here. I'm happy with what I got right now. Let me take a little off the table, and then we go higher, because I just don't see anything sending us higher. But yeah, on my radar for the week is earnings. Mary Ellen, like you hit pretty solid. I mean, I'm a follower, pun intended, on Facebook, and following all the big. Last week was big for financials. I mean, this week's tech and a hodgepodge of stuff. But from Goldman Sachs, the Death Star beating it to J.P. Morgan to the one that. Out of all the financials, I think the one last week that was the most important to me was Wells Fargo. They don't have a FIC. For you guys who don't know, it's a fixed income currency commodity. So a lot of the beats last week from the blue bloods up there on Wall Street were based on trading and a little bit of M&A. It wasn't on stuff. And the Wells Fargo was a miss, and it was a bad miss on like mom and pop car loans. I mean, they're the corner. Wells Fargo's more of a it's right there on the corner helping stuff out. So I think this week I will be looking at earnings and how they're doing. But again, at the end of the day, when it comes down to Google, it doesn't do it. You can't eat it. You can't sleep on it. I know we're going to talk about gold in a second here. I'm less concerned about earnings this week because there's so many that they're going to be all over the place that I don't think they're going to impact the market. I think what impacts the market is what comes out of the Fed's mouth on Wednesday and what they telegraph. Like things are kind of looking good, and I'll see in September or not. So that's my big long rant there.
Hey Matt.
Yeah, go ahead.
Yeah, just real quickly for the benefit of the listeners, a lot of positive comments on technology and semis in particular. But just like I said, for the benefit of listeners, I think we should make it clear that yes, semis have been making new highs since their lows last August and February, but the semiconductor index has not made a new bull market high. I just thought that should be on the record. It's getting close, but it has not broken out the way the Dow and the S&P have.
That's interesting. Okay, that's a good piece of intel. Go ahead, Marielle.
I was just going to say, I think it depends on what index. If you're using the Philadelphia Semiconductor Index, I have 751 as a high, and it's at 745. Is that what you're referencing?
Yep.
Yeah, and then there is a semiconductor ETF, and interestingly, that has hit a new high. So, yeah, different variables, but we are awfully darn close on the Philadelphia.
Okay, Mary Ellen, question number 4, do you trade or invest in gold in some form? Do you think gold is an important long-term investment for your portfolio?
I am not a gold bug, if you will. I do own some in my personal portfolio, but that I picked up earlier this year. I don't have a lot to say about that. Can I circle back to the S&P?
Absolutely.
Or would that be out of
no.
out of context? Only
Fire
because,
away.
interestingly, you did bring up that chart earlier, and you had a 50 and a 200-day moving average. I was just going to throw out there with my work, I do a lot with moving averages and focusing in on the S&P. At this point, it's about 3.5% above its 50-day moving average, which is stretched. But more recently, just going back historically, certainly since the beginning of this year. The S&P 5 has been able to get to 6%. 6% has been the max percent above that 50-day, and then we see activity. At the very least, a pullback. We have seen close to a correction. Once it gets to 6% above that 50-day. Just thought I'd throw that out there.
That's good intel. Yeah.
Yeah.
But you're not a big gold bug.
I'm not. I'm going to pass on this.
No, hey,
Yeah.
that's exact. We were talking earlier, like when Ed said, "Hey, everybody appreciates all of our honesty." That's the good thing, because we're not on CNBC in a really bad suit trying to essentially plug something and speaking from the hip. So I appreciate that, Mary
Sure.
Ellen. Fausto, how about you and gold? I know. Could you day trade gold at all, or the GLD?
Yeah,
What do you do?
we've been killing it in gold. I mean, Nugget has been phenomenal. I mean, people don't realize it. Nugget, you got to go back all the way to back to 2010 when Nugget was at the 200, 225 price trend. This thing took a nasty hit. Went all the way down to the single digits, and then like in the past year, it was about $12. It went all the way to about $1.75. Some of the miners have been doing great, the gold miners, stuff like that. I personally own a lot of the actual coins. I actually took a little bit at like 1,600 gold in an ounce. I averaged down. I bought some more just recently, like last year. I'm a big fan. I think gold's going to go a lot higher. What happens is, like when gold made that. And I own a lot of silver too. Silver, I mean, when I do trade shows, I do a lot of speakings at trade shows. I always go to the coin guys, and I'm always buying, like, teaching my, I buy a bunch of coins and I give it to the holidays to my kids and my nephews and nieces. I always give it to them, like, kind of educate them a little bit about finance, which is a great thing to tell all the listeners out there. You want to buy a nice little Christmas gift or a birthday gift, whatever it is, buy them a silver coin. And kind of educates them a little bit more about the finance part of it. It's a great little interest to get them involved. Plus, they're pretty too. But with that said, not to get off the subject about the gold and silver. Yeah, I think gold's a very big. I'm very bullish on gold. I think it's going to go up a lot. I mean, I think it can go up a lot higher. And if it breaks through that major resistance levels, and then starts catching some traction on the news and people start talking about it, that's what drives the price of stocks and anything else. Once people start talking about it, and it gets a lot of advertisement, on TV and stuff like that, that's what's going to cause the demand for it. And also, one thing you got to be really, really careful. I don't think people realize this, because one thing that I teach my students what to do is not how much you didn't make any money until you sell the stock. So one of the biggest things I educate my students is that, before you make any money, you got two things to beat. You got a commission and you got a spread. The bad thing about buying, silver and gold, though, there's a huge spread. I think gold is like a 40 to a 70 cents, $40 to a $70 spread between the bid and offer, just to break even. So that's, I think, what turns people off a lot. And silver, I think, when you're talking about spot, I mean, you're talking it's about $1 to $3. So that, and just like, that's why a lot of people are very cautious about Forex. So like, why is that? Like, when you, and we deal with it every day, people don't realize it's like, yeah, when you buy, you change in your dollar and you want to buy euros, where's this 10-cent spread coming in? Or who makes that? So, and you don't know this until you're a trader. So that's why you got to be really smart when it comes down to that. But and that's why a lot of people says, well, you have to buy the coin. Maybe you just buy the ETF, which you can. But I don't know. I think the coins are a really, really good buy.
Yeah, if you have physical stuff, it's physical stuff.
Exactly. That's how I feel.
Yeah. If you have paper, you have paper. It doesn't matter what that paper says you have the right to or whatever. That thing can be lit on fire or the government could shred it. So I agree with you, Fausto, along with a lot of coins like you have, man. I got a couple AR-15s and a lot of water that I'll throw in my car and head to Montana when everything happens. So, but anyway, Ed, how about you? Are you what's your take on gold?
Yeah, I'm not real eager to be in gold right now. I got a cycle low coming up next week that I want to see how it handles that. We should get some kind of bounce. We'll settle low here sometime in the next few days or next week. and then I want to see that low hold before I get too excited. I'm not a big Elliott wave kind of guy, but sometimes it's just so obvious, you know, if you know anything about it, that and when I look at the chart going back to 2011 from the high back then, it's pretty clear there's a 5-wave down move all the way down to last, what was that, December. And usually that's, you know, when you get 5 waves down, that's an impulsive move, as they call it. And I would call that wave A, and this bounce since then has been wave B. It went right up to the 38.2% retracement, Fibonacci retracement of the bear market decline, and turned around 2 weeks ago and started headed south again. If I've got this thing figured out, you know, we should now be in wave C back down to a minimum of where gold was last December. But like I say, I want to wait and see how this cycle low coming up next week treats me, and if it can hold that low.
Okay, that makes sense. I'm a 50 delta on gold. Like I said with Fausto, I have physical because it's physical. Not big on the paper, like the GLD and the GDX or the miners or whatever. The problem I had with gold was, we were talking earlier about catastrophes, or at least what we all as traders used to think were in the pre-2008, in the quote good old days when capitalism and markets were actually allowed to move and things were allowed to fail. Catastrophes or badness send people flocking into gold. Nowadays, it's not necessarily the quote flight to safety that it used to be, and it's still advertised as. I still hear quote unquote smart people talk about it as that, and I look at some of the bad things that have happened recently. Brexit excluded, so there. Let me just take one of those back. But still, if some things, I tell my traders, if something's not doing or performing as you expect it, and you're confused, get out. Because some people say, well, if Dow theory or whatever, it is doing what it's supposed to be doing, Whiz, because it's at 129 right now. That's what it's supposed to be at because it is at that. I get all that, but I just think try and get past that whole, it shouldn't be kind of doing this because of historically these reasons. Kind of like Fausto alluded to earlier about being at these uber record highs. Who the hell are you to say what the hell we're going to do? Because right now we're all Captain Kirk, and we're boldly going where nobody's gone before. So if you got a chart for this new direction, I'd love to have it. And I find my last note on gold is this, because a lot of people I hear are confused as well as me sometimes with, well, it should be doing this right now. I say, hey, remember, gold doesn't have a CEO. It doesn't have earnings. You can't eat it. You can't fly on it. You can't drive it. You can't live in it. I guess the best you could do is put all those bars or coins in a pillowcase and swing it around in prison and hit people with it. That's about it. So until our government completely collapses, and we are in Utah and Colorado, like in Tombstone, using these gold pieces, I'm gonna. There's other ways for me to protect against panic or a flight to safety than that thing. So I'll leave it at that. So I'm definitely not a gold bug or anything like that. So all right, guys, and Mary Ellen, let's start at the top of the batting.
I was going to say I'm used to that. I worked on a trading desk for a lot of years.
I was going to say, if you got your start on the floor with Goldman Sachs, this isn't your first rodeo. So well done, congrats. I want to steal a trade from everybody, and then I'll give one out too. What do you like, Mary Ellen, either for the week or out to 2018 or out to next month or 6? What's a good trade on your radar that could be a juicy trade for some of the listeners?
Well, that's a great question. I have a number of stocks on my radar. My newsletter currently has 21 stocks that I like, and some of them I love. And we've talked about technology. That is certainly right now a sweet spot. There's so much going on with mobile. Everything is going mobile, so those companies that provide, be it the chips or other components, are look great, and they are doing well and should continue to do well. The Internet of Things is not over yet. We heard talk of that last week with Intel, that boosting their shares. And Qualcomm had a great week last week. I don't know if any of you guys picked up on that one. It gapped up. Another one in that space. So poking around over the weekend, I go through probably thousands of charts over the weekend, just trying to come up with a good game plan. And a lot of the technology stocks are extended. It's hard to get really excited and interested in new entries right here. So what I did is I found a computer software stock that was a big winner. It peaked last July. It's Fortinet, FTNT. It's a $6 billion security. It provides the firewall and security for big companies, the government, and so forth. And so here's a stock that is still quite a bit down from its peak in price, and it's turning. It looks to be turning. It is due to report later this week. It's about 30% from its high in price. So that's the kind of thing in technology that is interesting me now, where there is a potential turnaround. So I like that name. Yeah.
Okay. What's your real quick, Marilyn? Since you mentioned earlier, what's your take on Facebook earnings? Since tech I agree with you that it's a little over its ski tips.
I'm excited. I think if you look back, take a look at their prior earnings releases. The last four, they've come in well above estimates. Their last release, they reported earnings the end of January, actually, and as everyone may recall, that was a disastrous period for the markets. The markets continued to go down into mid-February before the markets bottomed. But Facebook came out with earnings in the thick of that and blew the doors off and did really well. It gapped up in a very terrible market. The bigger point is I expect them to have a good quarter, and I like it. I think technically it's just really been trading tightly, and it just looks like a spring wire that's tight and looks poised to go up.
Okay, love it. Good stuff. Okay, Fausto, over to you, man. What are you staring at right now while everybody's been talking? Because I know you're day trading. What do you like?
You want to know, is it a swing trade or a day trade?
Yes, exactly.
I'll give you both. On the swing trade side, I probably can't believe I'm saying this, but Microsoft has been testing a all-time high, which some of us probably totally forgot about a long time ago. If Microsoft does break this all-time high, which we're testing right around 57, then you could see this thing break out. It did test it today and it backed off. I'm keeping an eye on that. Apparel, a lot of bad news came out on Ralph Lauren, and it actually, Ralph Lauren came out with that news. It was $116. I'm finding out a lot of apparel companies are taking. A lot of people ain't spending money, and I know Ralph Lauren laid off a lot of people. They laid off a lot of the executives. I know people that even worked there, and it bounced. It came back. So one of the most expensive. People have to realize that one of the most expensive that I've learned as a trader, the most expensive expense that a company has is employees. Correct. And when they start trimming that down, then everything else will make sense. So and so that is, it's starting to look like it's breaking an all-time, it's a high back in March where it's been taking a big hit. But if it does break past this, 100, it looks pretty strong. Another big stock that I've been a fan as a swing trade for a while, I think I told you last time, was Under Armour. Under Armour's been signing contracts everywhere. It's been really like being a thorn in the back of Nike lately. So, it's breaking all-time highs right here. It's testing that major resistance at 43. If it breaks that, look at this thing go to 48. And also on a swing trade, been a fan of, there's been a rumor of a buyout on Harley Davidson, and Harley went from 42 all the way to 55 in one day. So I've owned that also. I own it right when when it backed off on that news. So that looks pretty strong. And something very speculative, which is obviously a day trader, what we look at, you got to look at this stock, Sky People Fruit Juice. I mean, this stock is up 35%. It was a $2 stock. It's already at, it went to a high of 21 today. I have one foot out the door, but we've been day trading this the past week, and our day trader's been killing it lately. From from the $2 all the way to 21 in a week. So the only thing what kind of makes me really skeptical about this is that the volume has dropped a lot, and it's still holding there strong, which is a very bullish sign. So when you see that, obviously, there's always people trying to take a profit, and it's been holding there. So that is something more on the speculative side, that which it's breaking, like a 10-year high almost. But that SPU is very interesting also on the bullish side. And that's about it. I think that probably nails them all.
Sounds good. All right, Ed.
Yeah. Well, something maybe a little out of the ordinary. I could see shorting Europe right now, specifically the Eurostoxx 50. The VIX over there has reached a level that's usually associated with price highs in the index. And let's see, it closed Friday at 29.65, but there's a triangle on the chart that points to minimum decline to 2,500. I got a cycle low due in late October, so I guess you'd consider that a swing trade. Another idea, a little more speculative, is emerging markets index, specifically the EEM ETF. It has triggered a bullish head and shoulders pattern, but there's a 6-month cycle high due right now, and so until it can get over last October's highs at about, 36.30, I wouldn't be chasing this one here. If anything, I'd be thinking of getting short on it. There's a couple ideas. And then a little longer term, you probably want to keep an eye on oil. This pullback, I think, may be the right shoulder of a bullish head and shoulders pattern. And if it can get over the neckline at 50, that would trigger the pattern, and we'd be off to the races at the point. But that's one you have to put on your back burner and just keep an eye on for now. That's it.
Oh, okay, awesome. Mine is going to be in the spirit of a little confusion out of Ed, Fausto, and I talking Fed and being in uncharted territories. All of this, to me, this is what I call a hold your nose rally. You have to trade the market that you have, not the market that you want. And not necessarily that I want a down market. I mean, that's not what I'm saying. What I am saying is that I don't think we should necessarily be up here either. I do a lot of consulting in corporate America, and I know before I give a speech to these companies, I give them a 25-page briefing document they have to fill out. I know a lot of what's going on in the economy, from the Fortune 1 down to some mom and pop tire store in Nebraska. So it's not good out there. The economy is just not good. I don't care what the media is going to tell you or the White House. I know it's not good. So, but we are up here. Now, last week, I do a daily video on my website, topgunoptions.com. And my traders know this. I beat this into their heads. I said, whenever you see a 1 and a 3 or a 1 and a 2 in front of that decimal point for the VIX, get long vol. I mean, look, going into the Brexit, the VIX was chugging along at right around 14-ish, which was a little elevated for me for what was going on, and we exploded, obviously. But now look at this. Last week, ladies and gentlemen, we had an 11 in front of a decimal point. That was stunning. So when you see, and write this down, when vol is cheap, you buy it. When it's expensive, you sell it, and this is the VXX. So it's just, like I said, I'm sitting down here in beautiful Boca Raton, Florida. It's sunny out. Everything's great, and so that's when I go get hurricane insurance. I don't go get hurricane insurance when the Channel 5 lady comes on and says tropical depression over the Bahamas, and then I try and get hurricane insurance. I could probably get it for $18 trillion. So you want to be early. So with us up here at these hypoxic highs, I just put on on Thursday when I think the VIX was 1170-ish. I put on a bullish double vertical on VXX out to September. So I'm covering August in case there is a catastrophe that we talked about earlier. What is it, Whiz? I don't know. I'm uncertain. And whenever you say the word uncertain, think volatility. Well, what about September? What do you think is going to happen? Well, September, I know we have a Fed meeting come up. And every Fed meeting, everybody remember that what Vol would do going into the Bernanke meetings where it was maybe, oh, he might taper this time. Vol would go through the roof. And as soon as he opened his mouth at a microphone, I think we're still okay, and Vol would go back down. So it's almost like this is I'm not going to say a free trade, but going into the Fed meeting in September, where Hills and Rath of the Wall Street Journal has already prepped the battlefield a little bit, like, we're starting to see maybe a September. I went out and bought, or sold actually. This is actually ended up being a credit spread. I got paid to do this trade, this bullish double vertical. And real quick, just so you see the strikes, a bullish double vertical, if you have no idea what the hell that is, it's just two vertical spreads on top of each other with the same strategic mindset. So it's a bull put spread and it's a bull call spread. And like I said, I brought in a credit of about 37 cents to do that. And what's that? 75 contracts. Can't see them going blind. So that's what I'm looking at. I got a lot of other stuff in the hopper and everything like that, but I want to be protected just a little bit in case between now and September there's an unexpected pop in vol for what, fill in the blank, for X reason. If it doesn't happen and that trade loses whatever the max risk is, I don't look at that as a loss. I never went flying over Iraq in an F-18, and the chiefs say before I took off, like, hey, sir, the jet doesn't have an ejection seat in it. Do you want to take it? I would have, punched them in the face. So I don't look at it as, quote, a loss. It helps. It's a little bit of insurance to help me sleep better. So that's my trade du jour, or trade out to September.
Matt,
yeah.
Adding to that, like you said, last week the VIX closed at 12. The last time the VIX was below 13 was last August, right before the S&P dumped about 11%. So you're probably onto something.
Correct. That's absolutely right. I mean, I put these on throughout the year just when the hair on the back of my neck starts standing up, like, you know what, it's a little too good. It's a little too quiet right now, and invariably something usually happens to freak the market out. And I just want to be a little safe. Everything else in my portfolio, I'm shooting arrows downrange all over the place, but I'm going to sit on top of an ejection seat. So, okay. I'll tell you what, let's go ahead and Mary Ellen, why don't you give us a quick, what do you guys do at Pro Trader Strategies, how people can get a hold of, and how people can get a hold of you? Easy for me to say.
Okay. Yeah, Pro Trader Strategies has several people that are affiliated with it. They have options, and you just showed us a great example. And also gentleman that trades the S&P. I have my own research firm, as I mentioned, and my website is MemInvestmentResearch.com, and on there you can read all about what we do. It's, as I said, we put out a weekly newsletter. We've had an incredible track record here, and anyone have any questions, you can reach me via the website.
Awesome, Mary Ellen. Thanks for coming today. Appreciate it. Good stuff. And
sure.
Fausto, how do we track down you and what you do, my friend?
No problem, Matt. And if anybody, everybody hears negatives and positives about day trading and understand about swing trading. So, like I said earlier, what we do here at Cyber Trade University, been doing this for over 22 years. We are ranked #1 school 6 years in a row by Equities Magazine. We have we teach people, and we actually have a trading room, so we do kind of both. If you want to know what it's like to meet and see people that do this as a career and how they trade the market, and not only that, see how people control losses, which I know is a big issue, come and join us. Do a quick little trial. It's cheap. It costs $7. You don't like it, we'll give you money back. The whole idea we're trying to do is just come in there, see what people are doing, listen and how we actually trade the market, and know the real truth about it. Listen, I always tell everybody that there's some great speakers today, and I think everyone here should sample and know a little bit about everyone out there, because great educators surround themselves with great educators, and the thing is that everybody thinks they might be like to day trade, but it's not for them, or they might want to stock trade or options trade. You got to hear a little bit of everything, but do not be the person that goes out there and try to be the self-taught individual. So we want you to come out there. You can come and find us at ctu.co. That's ctu.co, not .com. This is a short version of Cyber Trading University. Do a quick little trial. You can give us a call. You can email me, Fausto, p@ctucorp.com. Be happy to talk to you. Listen, the last thing we like to see people is lose money, and don't listen to what everyone tells you out there in the street. That 80% of people lose money. Yeah, those people that lose money is because they were never taught how to trade, and we all know how that worked out. If you give and I just heard you before, Matt, talking about what do you have? Your son. You bought him a car. Is that right?
Yeah, unfortunately.
Listen, I'm just right up your alley, and I just got my son a Jeep too, and that's freaking me out.
Yep.
He's my oldest son. I got 3 boys, and I always tell I teach my kids like I teach my students. Imagine taking your child and just say, here's the keys for your car, now go drive it, and it's just about you just give it in there. You know what's going to happen to that kid not knowing how to drive. Don't do that with trading. Listen to great speakers out here. Learn a little bit from everyone, and find a great mentor. And you might need more than one. But you should have every right to go out there and learn how to do it the right way. So it gives you edge, because then you'll see why everyone makes so much money doing this. It is the greatest job in the world, and that's my take on it. But thanks for having me.
Great advice, man. Very, very good, sage wisdom from a veteran there, folks. And Ed.
Yeah. SeattleTechnicalAdvisors.com. Come on by. There's plenty to look at the website without being a subscriber. However, if anybody wants to send me an email through the website saying they heard this program today, I'm more than happy to send them today's weekly report, or market update, as I call it. So it's SeattleTechnicalAdvisors.com, and be sure and remind me that you heard this program.
Awesome. Thanks, Ed. And folks, you can head to TopGunOptions.com, and you can get some more information about what I do there, or you can head to go.topgunoptions.com/GetOWS. OWS stands for Options Weapons School. If you want to learn more about how to trade options, or that bullish double vertical that I just showed you, and how to stay safe using options, you can stop by. Fausto nailed it with all that. Really do find a good wingman, or actually a good flight lead, and stick with it, and really check out a lot of squadrons and see which one kind of fits who you are, because obviously if you're flying the wrong airplane, you're gonna end up in a lot of trouble, like Fausto said, and flying to the side of a mountain. So again, go.topgunoptions.com/GetOWS, and that's our Options Weapons School program. I do 4 ages. Catch how many 4 live trade briefs a week, and then every Wednesday night at 8 o'clock we do our live training. So there you go. If you're like, what the hell is a double vertical? Session 6 coming up. We'll talk about it for about an hour and a half to 2 hours with a glass of Pinot Noir on Wednesday nights. Okay. But awesome, great session today. That was really good, David. You got a good group of folks. So I'm going to throw it back over to David. Thanks for having me, and great working with all you folks. Have a great day.
Great, thank you.
Yeah, thanks. Great show. And I want to remind everyone watching, you can go to TimingResearch.com. You can find any of the past reports and all the show archives there, including this one in a few minutes. Also, join us, or be sure to check out the survey this coming weekend, so you can have your answers be part of next week's report. And join us next week for the show. We'll have Alan Nuckman, Jason Jankowski, James Ramelli, Sam Borgi, and Rob Hanna. And also just want to thank my Tom Essaye of SevensReport.com wasn't able to join us this week. He'll be on in a few weeks. But want to thank Ed Carlson of Seattle Technical Advisors, Fausto Pugliese of Cyber Trading University, Mary Ellen McGonagle of ProTraderStrategies.com, and of course Matt Buckley. Thank you for hosting again.
You bet, David. Thank you. Have a great day.